Hello, everyone. Thanks so much for joining. This is Matt McCall. It is the 26th of August, and we're going live here. I apologize. I haven't shaved in a couple of days. I got a hat on. I just got off the train from New York. I was there for a few days for a few business, personal things. So just got back, but I wanted to make sure that we were able to do a quick podcast here today. Over the last few days being in New York, I was able to do quite a bit of research in between meeting up with people and able to see quite a bit of really cool opportunities in the IPO market. So some of them are SPACs as well. We're going to talk about that coming up here in a minute. But again, thank you so much for joining me, everybody. And if the hat bothers you, I'm sorry. But again, I can show you the hair is quite a smash down here. I've been running around on the train all day. So we got some people from North Carolina, Miami, Mexico, LA, New Jersey, Florida. All right, thank you everybody so much. And I apologize for last week's. There were some technical issues on last week's podcast. We had to take it down. Turks and Caicos. Boy, you're one lucky SOB there, David. Being in Turks and Caicos right now. Good for you. But let's talk markets here real quick, and we'll get to your questions as well. Ed's asking, am I closer to the announcement of my new service? Well, every day I'm going to get closer, obviously. So I'll tell you that soon. That's all I can say. I mean, excuse me. My hands are so tied from what I can say, but soon. That's all I can say. And it's all positive, all good vibes. Everything's great. New Zealand in the house, Germany. Thank you so much. So yes, and promise. I know I keep saying this, but the moment I can share anything, I will. I swear, I will share it the moment I can. I can't wait. I want to. It's not like I'm holding back. I want to. So the moment I can, I will. I promise. So let's just talk markets here real quick before we get into a couple topics. And just in the last 30 minutes or so, last 30 minutes to an hour, the markets started selling off near the low, actually at the low today now. The NASDAQ's down now, not the low today, but down 87 points, about 0.6%. Dow's down about 0.5%, 175 points at the low today. S&P's down 24, down 0.5%, low today. Russell 2000's down 0.9%. It was up earlier, again, near the low of the day as well. Gold's actually up a little bit, $2, but it's dead money. Oil's down 1.3%, silver's down 1.1%, and Bitcoin's pulling back. It's down to 47,000. We'll talk about Bitcoin and cryptos here in a moment, but I just want to talk about the markets. We closed at a new high for the S&P 500. Then yesterday, the NASDAQ is above that very important, or psychologically important, not very important. It was above that 15,000 level for 2 consecutive days on a closing basis. Right now, it's at 14,980. As I mentioned, down about 0.5% here today. So you are seeing everything pull back, and again, you can't go up every day. The NASDAQ, keep in mind, was at around 14,400 a week ago and went up to 15,000 to a new all-time high. Can't go up every day. It was up 5 consecutive days. We're going to pull back a little bit. That's fine. Let it consolidate. So no big worries here right now when you're looking at the market like this. So stocks still look good. Innovation still looks good. For me, just as a bit of a benchmark, I look at the ARK Innovation ETF because that kind of goes in line with a lot of stuff that we do. It's down about 1.6% today. So that's getting a little bit bigger than the market. It was up earlier today too, to the best level in 2 weeks, and it's pulling back. From day to day, again, too tough to kind of try to figure this market out. There's so much. We had the terrorist attack outside the Kabul airport, Kabul airport in Afghanistan. That it seemed like the market kind of sold off on that, bounced back, and then drifting lower. There's some stuff going around the world right now, going around the world. I was just in New York City, and you need a vaccine card to get in anywhere anymore. Like, it's just things still seem a bit funky. Am I very confident that we're not going to have any true shutdowns? I am. But, there's some weird shit going on. And there's a lot of politicians trying to make names for themselves. One example is the newer mayor here in Baltimore. Young guys trying to make names for themselves. So they're going to do stupid things and make bad decisions on both directions. And, you all know that I don't side with one side or the other. I think all politicians right now, or majority, not all, I never want to say all, majority of politicians are as crooked as they come. So we're going to deal with stuff like that. So from day to day, week to week, you're going to deal with some weird stuff going on, and that's going to affect the market, honestly, in the short term. And remember, in the short term, markets are irrational. The long term, the fundamentals play out. It's proven over 100 years. That's how it works. Okay, so Bitcoin, is above the 50,000. We talked about it. I said last week it's going to break 50,000 over the weekend. We hit 50,000. It's now down to 47. So we're down, a decent amount. I think it probably down about 8 or 9% from the recent high in the last week. Again, we have a big run up. You pull back, and a 10% pullback in Bitcoin is not the end of the world. I still think we hit a new all-time high above 65,000, which means the alts should do very well as well by the end of the year. So again, I say this every time, but people always ask, so I want to make sure I get it out there. Let's see what else. Kawan just asked when I'm launching a new service. Yeah, Ed, thank you so much. So if anybody else wants to help with answering questions, if somebody asks a question of something I already said, please feel free. We're a community. So definitely do that. So I want people to join in and create that community. So we'll get to your stock questions in a minute. I want to go through these IPOs. There's two topics I want to touch on today. One I'm going to touch on briefly and more the next time. One, as I mentioned in the Twitter post, is IPOs. Some recent IPOs and SPACs that are, in my opinion, probably a lot of them you never heard of. You may have heard of them briefly, but stocks that I feel that are close to buy ranges right now, if not in a buy range already. And then another area that it's personal, and I don't mind sharing it, but I'm a big advocate of mental health. I think talking to therapists doesn't mean you're crazy. I think everybody should talk to a therapist because we all have stuff going on in our heads. We all have stuff going on in our lives, especially what's happened in the last 2 years. Shit. So, me personally, I deal with some mental health issues, anxiety, slight depression for many years for stuff that apparently had happened as I was a kid. So I've dealt with it on and off for many years. And recently, I've been trying to get a new psychiatrist to talk about things, and then get into a regular therapist once a week. I got to tell you, I've called every place around Baltimore, and everyone either has a multi-month wait or not taking new patients at all. So again, I'm going to turn this to investing because everything in my mind turns to investing. Old Peter Lynch way of viewing the market. That tells me something. If you have a kid, tell them to be a psychiatrist because there is so much demand and it's not going away. And more people are taking that route of seeing people, and they should. And I'm not saying to pass out drugs to people, but just to talk and therapy. I think there's a huge need for mental health practitioners out there that is it's underserved right now. That market's underserved. So that's one thing to look at. So take a look at that Peter Lynch. So I'm trying to find stocks and companies that can play off that. So there's a couple recent IPOs that play into that. So I'm going to talk about those today as well. And that's a topic, again, that whole Peter Lynch way of looking at things that I'm going to continue to hammer home because we can all do it. I just love the fact that we can all come together and share ideas on here because I can't see everything. My research team can't see everything. You're going to see things I don't see. So if you know of a company that is a mental health play, let me know. Put it into things. Send it on Twitter or wait till next time. We'll cover more of it and share it because we are a community here to help each other. We're all on the same side. That's what we need to know. The thousands of people that watch this video, we're all on the same team. And I think if in life, if we focus more on being on the same team versus I, the old saying, there's no I in team. You always have to look out for yourself, number one. I get that. I believe in that. That might not be a consensus belief, but I believe you always have to think about yourself. But above and beyond that, we are all community here. So I want us to work as a community. And I got to tell you, over the 20 plus years of investing, I've gotten so many good ideas from people saying, Matt, have you noticed this trend? Have you seen this stock? And I did a research and I come up with it. I wish I could take credit for all the winners. I can't. People share them with me. So I want that to continue here. So I'd love to see more interaction. And as we get forward with my new venture, we're going to create so many new things, more videos, more interaction, more in-person stuff once the world gets back to normal, which is hopefully soon. So I can't wait to create this community. Dave Ramsey's done a really good job of it, but he doesn't do what I do. He's more pay your bills, don't do debt, which I don't. I mean, you should pay your bills. Don't get me wrong, but the whole debt thing, I don't agree about. So but he's great. But what he's done, he's great. Created a great community, and I applaud him for that. He makes a shitload of money doing it, but I applaud him for that. So we want to create the same thing here. So keep that in mind. All right. So real quick, somebody's talking investing, mental health. What do you think? You still want to get personal touch with therapists, otherwise talking to a robot? Yeah, that's a good question, because I'm going to get into some stocks here in a minute that touch on mental health. Some are virtual, and to me, I've done virtual therapy sessions, and they're not bad at all. And especially if you're traveling or you don't, it's further away. Not every time, but I think it is a good alternative, and for a lot of people, it's going to work well. Ed mentions Modern Health. Let's see. Yeah. Still a private company. Okay. All right. So let's get into these IPOs. Let's zip through these. Oh my God. See, seriously, this was not set up. But the symbol on the first one is Zip. I swear to God, it must have been mentally in my head that I said that. It's ZipRecruiter. This company went public back in May. ZipRecruiter is about a $2.9 billion company. So it's what it sounds like. It's an online marketplace that employers use to connect with potential job seekers. So it's, if you're looking for a job, you go there, and employers go there looking for people. Excuse me. So to me, that's a really hot area right now, because there's more job openings than there's ever been. Unemployment rate's getting better and better, but there's still a lot of people out there that either don't want to work or they're holding out for the higher level jobs. So there's still a lot of people looking for work. I will say this: walking around Manhattan the last few days, there's a lot of places hiring. Sherwin-Williams is hiring a ton of positions. Like, that's not a bad paying job, I bet, to work in air conditioning. So there's some jobs out there, folks. A lot of people don't want to do that job because it's below them. But to me, ZipRecruiter is in a really nice area. They had revenue last year of 418 million. This year, 668 million. So you can see that's over 50% gain. Next year, or by 2023, 922 million. That's about 16% annual growth per year, which is nice. Earnings per share this year be profitable, barely 2 cents a share. But again, within 2 years, 44 cents a share. So it's 22x in 2 years. Granted, when you go from 2 cents, it's easy to go up 22x, but still, you're seeing nice growth. And again, it's only a $2.9 billion company. And the stock was down below $20 the first day of trading, ran up to 32, back down to 22. It's at 24.60 today, down about 3.4%. I think down around here looks pretty damn good. So that's one I'd want to keep an eye on. The next one we have is it's a very similar symbol. Try to say it a few times fast. It's ZIM, Z India Mango. I don't think mango is the right word, but Zim Integrated Shipping Services. This company went public at the end of January. It's a containing shipper services company, so shipping containers. And we know the supply chain issue we're having right now. Demand for shipping is very, very high. It's a $5.7 billion company. It's weird because of, I think, what's going on right now with the whole supply chain issue. Revenue's all over the place. Last year, $4 billion, which price of sales trailing is really damn good. This year, nearly 9.7 billion is what the estimates are. 2023, so it dips 2022, 2023 dips a little more to 6.4 billion. But again, still price of sales of less than 1 based off that. And who knows, if this supply chain issue continues, it probably continues to do well. So of course, that goes down to the bottom line. Earnings per share last year, $4.95 a share. For a stock at $47 is pretty damn good. This year, $31.82 a share, believe it or not. By 2023, back down around $5 a share. But again, at 47.21, that's still less than 10 PE ratio. So I think there's big upside potential. Last year, it paid a $2 special dividend, or sorry, this year. This year, it paid a $2 special dividend. It just went ex-dividend a couple of days ago. And it gets paid out on September 15th. But you already missed it. You missed the date. And there's most likely, if they're going to make this much, they'll have a huge payout late this year, early next year, most likely, with a special dividend, which people will love. Stocks tend to go up when that happens. But this stock opened up down around $10, ran up to 50, back down to low 30s, and back around 50. Today it's down about 5% at 47 and change. It's an aggressive play, but boy, this is one, again, you may want to keep an eye on. All right, let's keep moving here. Then we got a bit of a smaller company. This is BurgerFi, BFI. BurgerFi International was a SPAC. So this was a SPAC that had an announcement actually last year, and it shot up from 10 to nearly 20. back down to 10. It's been all over the place recently. It was at as high as 16 in April. It was below 10 just a week ago, and now it's at $10.10. Very small at $183 million. That's a very small market cap. Revenue last year, 32.6 million. This year, 57 million. So you're looking at, very nice growth. You're looking at about 75, 80% growth, give or take. They're expanding the business by about 25% this year. They're opening up 25% more. I think there's a little over 100 now, and I think they're opening 30 more stores. Not a lot of estimates out for this. They're not going to be profitable, looks like, anytime soon. But again, if they continue to grow revenue like they are right now, and opening more stores, looks like that this could be a fairly inexpensive play based on the fact it's only $183 billion company. I eat healthy, but I love burgers. Burgers I love, and I'll pay whatever it takes for a good burger, honestly. I've never had BurgerFi. Has anybody ever had a BurgerFi burger? If so, let me know. It's just not. It's not. I don't know. I've seen them. I just never had it. Never popped my head into one. I will tell you, and I've said this multiple times in the past, and I've had this argument with people all over the place. Oh, Connor, it's across the street from his house. Where do you live, Connor? That it's across the street. Not the exact address, but what town? Pound for pound, dollar for dollar, the best burger on this planet is the Burger King Whopper. I will take that to my grave, and I will argue anybody. Dollar for dollar, the best burger on the planet is the Whopper. And I know a lot of people won't agree. Orlando. Okay, so it's in Orlando. So BurgerFi, again, one to throw on your watch list. A little aggressive, very small, but one, again, to put on your watch list. The next one was also a SPAC at one point, and this is the original Bark company. Actually, this one wasn't. Sorry. Yeah, it was. BARK. So Bark. BarkBox is really kind of, I think, what it goes by, but the name of the company is the original Bark company. About a $1.2 billion company. It's dog centric, if you like dogs, I guess. But they had the monthly subscription business where a box comes every month for your dog. A lot of people get that, whether it be soaps or wines or whatever kind of clubs you're in. Dollar Shave Club, you get your shaver every month or whatever it might be. There's so many out there right now. So BarkBox is one that does that, obviously, for dogs. And pet spending is huge. People love their dogs. Revenue last year, decent revenue, 329 million. And that's for it ended in June. This year, their fiscal year ends at June. So fiscal 2021 ended a couple months ago, and they had 421 million in sales. Looking ahead to fiscal 2024, so middle of 24. So not too long, only 3 years from now, a little less than 3 years. 937 million in sales is projected as 26% annual. So again, based on 1.2% market value, it's not too damn bad. Earnings per share should break even around 2024, fiscal year 2024. So it's mid 2024. So I kind of like it. I think this is a one where, again, you all know my feelings if you've been following me for a while. My views on pets. I dog sit from time to time. A friend of mine lives at the other side of the building. I'll dog sit her little pug, and he's cute as hell, Simon. But I just don't. I don't want it. So. Yeah, I just think it's a lot of work for somebody like me who travels a lot and gets around. Diana agrees with me about Whoppers. I love it. I don't know what the hell they do, but it's flame broiled. I feel like the tomatoes, the lettuce, the onions are always fresh. Sure, you'll get a bad one from time to time because you might have some bad workers at one, but I gotta tell you, man, I like them. I haven't had one in a long time. I'm overdue for one. I'm making myself hungry here. So BarkBox is one to keep an eye on. The next company you probably never heard of. Symbol AGL. Agilon Health is the name of the company. This went public in April. Traded down around 27, 26 bucks. Ran up to 44 in June, back down to 31. It's around $36 here today, basically unchanged. So kind of in the middle of the range. So I like where it's trading right now. It's a bit bigger than the last couple I've talked about. It's a $14.1 billion company, still in that mid-cap range. It's a platform, though, that physicians use to serve patients that are in the Medicare Advantage program. And there's a lot of people in that. That's your seniors. And it helps. This platform helps facilitate payments and receiving of payments. All doctors, all physicians love that. So this is one of those win-win-win-win-win situations. Everybody wins in this. So 2020, they did 1.21 billion in sales. This year, 1.8. By 2023, 3.27. So you're seeing nice upside growth. It's about 27% annual growth. Earnings per share, the first profit will be in 2023, according to the estimates. I literally just erased the whole thing. Where did I just go here? Oh, there it is. Okay. So first profit in 2023, estimates about 16 cents a share, but it's coming from a pretty deep loss. Earnings are expected to grow 74% per year in the next 3 years. So big upside potential in this company. You're playing with Medicare Advantage, you're playing with healthcare, you're playing with some type of governments that the government tentacles can get in there. So there's always that risk. But again, I think this is a company to help diversify outside of all the tech that we always talk about. Again, want to keep an eye. I like where it's trading right here. The next one's, well, again, one you probably never heard of. And this one is a play on COVID. And again, you probably never heard of it, but it's had a hell of a run the last couple of weeks. And this is a company by the name of Valneva. Symbol is VALN, N as in Nancy. This is a French company that started trading in the US in May, around $27, ran up to 31, fell to 24. It's at 25 about 2 weeks ago. It hit 36 yesterday. It's big gap ups the last couple of weeks because this French company, it's only $1.7 billion company. It's a vaccine focused company. So you see where I'm going here. They recently filed this week for the initial approval of its COVID-19 vaccine in the UK, the UK's version of the FDA. This company already has an agreement with the UK government for 100 million doses if the COVID-19 vaccine gets approved for 2021 and 2022, with another option for 90 million more doses through 2025, again, with the British government. So that's big news if it gets approved. There's a huge if there. But what I like about this company is they had revenue last year, 125 million. This year is expected to hit 335, and then next year spike up real high, then come back down to 476 million in 2023. But that's still great growth. So it obviously has some products on the market already. And again, only a $1.7 billion valuation. So this is one that you really have to kind of put on your radar. I mean, I don't know if I tell you this, I wouldn't chase it and buy it up here. It's at 35.12. It was up, 2 days ago, it closed at 36. Yesterday, it closed at 33 and change. Today, it's up $1.37 to 35.12 right now. So it's been all over the place. And it could easily pull back and fill a gap at 31, but it's up on the news. So the news is pushing it. But if it gets approved, obviously, this is a huge winner. Again, aggressive, but I wanted to put this one on your radar because nobody's talking about this. You're not going to hear this on CNBC or Fox Business or anywhere else. These are small companies. Again, this is why you tune into me, because I'm going to try and find these for you as much as possible. Gail, look at that, from Scranton, Pennsylvania. Coal country, Poconos. My first wife was from outside Scranton, Pennsylvania. I've only been divorced once. I only have had one wife, but my first only wife, she was from Scranton, outside Scranton, Pennsylvania. All right, the next one we're going to take a look at, again, that's VALN. That is one, again, put on your watch list, folks. The next one I've talked about a few times already. This was a SPAC that's actually holding them really well. And this is Porch, and the symbol's PRCH, Porch Group. It's a $1.8 billion company, and it's really a play on the real estate boom that's going on. And it's a software company that connects a lot of different parties together, from inspectors to people who, utility companies, anything you're doing in a condo or a house, connecting everything together. It's part of that smart home move, if you will, and just making everything easier, like Angie's List and everything's done online. So they have really nice growth. They have revenue growth annually of 27% a year, earnings growth annually of 43.6% a year. Last year they did 72.3 million in revenue. This year 185 million, so well over 100% gain year over year. By 2023, 357 million. So big top line growth. They should be close to break even by 2023, likely profitable 2024. That's okay. Path to profitability for a $1.8 billion small cap that's growing top line like they're growing. I'll take it. Stock's at 19 bucks. It was just at 15 and change about 3 days ago, but it's been all over. It was at $10 in December, 24 bucks in February, $12 in April, $21 in June, $15 last week, $19 today. something like this, you try to buy on weakness because there's going to be weakness. It doesn't go straight up. And on pullbacks, when you don't think you want to buy, are the times to buy, is what I would say when it comes to Porch or any stock that moves like this. Okay, the next one is actually a play on batteries. Enovix, and the symbol is ENVX. This company was an IPO at the end of, or was it end of December, beginning of January? Beginning of January, first week in January, went public around $13, ran up to 27, so it more than doubled in the first 6 or 7 weeks. Pulled back down below the price, down to $12, back up to 25 in July, back to 13 and change just last week, and now it's at 15 and a quarter. So again, one of those stocks all over the place, but I like the fact it's pulled back. $2.2 billion company. It's working, as they say, in the future of batteries. It does deal with lithium, but it's got silicon anode batteries, so a little bit different than your traditional lithium ion battery. They're building them first, smaller ones for gadgets, for your phone, computers, that type of stuff, watches. Then the plan is to build larger ones for EVs, electric vehicles. Very, very early company. This year, looking for revenue of 1.75 million. That's negligible. By 2023, 150 million. So big, big upside potential. However, it's already a $2.2 billion company. Even though the estimates are it could be profitable by 2024, it's only 3 years from now, it's got a long way to go. And if things don't work out, you know what can happen to a company like this. So again, extremely aggressive. But to me, when it comes to batteries, I think you all know how I like to play this. Play a basket. When it comes to batteries, you have to play a basket because I think solid state batteries will be probably the biggest winner in the battery, the next generation batteries during the roaring 2020s. That being said, it's going to take several years to have those mass produced. So you have to have a very long-term approach to that. But again, by the time they're mass produced, the big money's been made. We all know that. You have to be early. The other thing you have to realize is, what if I'm wrong? And I still could be right, but there could be several other next generation battery technologies that come to fruition. That's important to have that diversified. So a company like this, a company like Li-Cycle, LICY, I've talked about in the past, that does lithium battery recycling. You have QuantumScape, which is solid state batteries. You have so many out there that are playing different angles. Battery storage. You want to build a basket. I think that is truly the best approach to doing that. All right, I got 3 more here, then we'll take your questions. The next one gets us into that mental health area that I alluded to early on. And this company went public in June. And the name of the company is LifeStance Health Group, LFST. And it opened trading around $20, ran up to 29 and change, and it had a huge sell-off. Took it down to $11 in August. Today, it's just under $14. So it took a big hit on news. I believe it was his first earnings report that came out that really crushed the stock. I had it written down, but I can't find it here. Let me come out and see exactly what happened. Let's see. Obviously, there's always claims against it. There's always, anytime a company falls like this, every ambulance chasing attorney comes out and tries to say that it's there's something going on. Let's do a class action lawsuit. So August 11th, they released their second quarter numbers. They had a net loss of 70 million, and it was below estimates. So they got pummeled for that. Again, it's its first report as a publicly traded company. When I look at the numbers for LFST, it's a $5.2 billion company after this pullback. They do both virtual and in-person outpatient mental health care. They have over 3,300 psychiatrists that are employed by LFST. Last year, they did revenue of 377 million. This year, looking for 670 million. 2 years from now, 1.2 billion. Looking to be profitable in 2 years from now. Top line annual growth, 27%. Bottom line, 73% annual growth. So the numbers look good to me. Again, first quarterly number as a publicly traded company, they got absolutely shellacked. Could they rebound from that? Absolutely. I've seen this story so many different times. Could it take quarters or a year for it to really start moving higher? Absolutely as well. But it is, again, one I put on my radar because I personally see the fact that I can't get in as a new patient for mental health care, psychiatrist, therapist, psychologist. You can't get in anywhere. And I don't care. I'll pay cash. I'm like, it doesn't matter if my insurance covers it. If it's somebody good, it doesn't matter. You can't get in. So that's, again, you want to put this in your radar. And I'm going to talk more about this next time, but I just wanted to mention this because it fell into our whole IPO thing that we got going on here. So does the next one. This is one that was a SPAC. After the announcement went from 10 to 12 bucks in February, back down to 10 with everything else. Once it made its merger, it's now down to $5. So it's 50% lower than the SPAC price. This is Talkspace, symbol TALK. So this is a virtual behavioral health company, is what they tout themselves as. It's now only worth a market cap of 765 million. Last year they did sales of 61 million. This year looking to more than double to 125 million. 2 years from now, again, more than doubling in the next 2 years to 275 million, close to profitable in 2 years. Top line is growing 30% annually. Bottom line, 65% annually. Again, I think this is something that you really want to put in your watch list. I don't try to catch a falling knife. You're close to an all-time low here, close below $5 a couple weeks ago and last week as well. But it's at $5 right now with 28 minutes left in trading. Again, I don't catch a falling knife, but this is one, again, I just put on my watch list. I keep an eye on it because it fits into a trend. The last one isn't really directly related to that, but it came up in some of my searches, and it's a recent IPO. This is Atai Life Sciences. The symbol is ATAI. Went public in June, around 20 bucks, ran up to 22 that day. It's the highest that it's been. It fell all the way down to 13 bucks that 3 weeks ago. Rallied from there up to 16.51. It's up a few pennies today. This would be the best close we've had in about a little over about a month. 2.5 billion dollar company. No revenue now, no revenue in the foreseeable future. It's a clinical stage biotech that's using mushrooms, psychedelics, and ketamine, which is basically a cat tranquilizer that a lot of kids and young adults abuse for recreational purposes, which is nuts. But they're using that and testing it out for people with mental health issues. I've read a lot about this. I've listened to a lot of podcasts about it. I think there is something to the whole mushroom psychedelic. Ketamine, I don't know much about as far as using it, but I have seen articles where it says it works, but who the hell knows? Where this can work for mental health, for people with PTSD, especially a lot of troops coming back. That mess in Afghanistan's terrible, that bomb today. 2 bombs, I should say. So it is something to keep an eye on. Again, this is so aggressive, and this is really out of my wheelhouse aggressive, but I wanted to put it out there because it is attached to what we're talking about, and it is a recent IPO. So that's why I wanted to throw it out to you. Again, no buy or sell recommendation here. I'm sharing ideas with you. You have to go do your own due diligence and go from there, but I just want to share where my mind is coming from at these moments. So that's where we stand right now. Let's get to your questions here now. We'll take a few of these. We're already 33 minutes in. I talk way too freaking much. Let's take a look here. One just came through just because I saw it again. I don't pick and choose. I just, whatever my eye sees. NIU Technologies, which is NIU symbol. It's a Chinese electric scooter company. I saw so many again zipping through. When I was walking to Penn Station today with my bag, I walked right by one, and it was Lime. You know the Lime scooters that you stand on, the little ones you stand on. But this was a Lime, and the company that makes that scooter is NIU Technologies. Many of you know I met the CEO 2 Octobers ago in Portugal at the Web Summit. I'm going again this October to the Web Summit. It's actually the first week in November. One of the greatest collection of tech minds out there and innovative minds. It's awesome. I got so many investing ideas from that. My past subscribers made big money off this because we already had it before I met the CEO, but that just solidified and the stock moved really big from there. It's fallen from 50 down to 26, so it's basically being cut in half. I still like NIU going forward. It's an urban mobility play, as I call it, and it's a stock that I think still has really big upside potential. It's only a $2 billion company. They do have sales, and most of their sales come from China, but they also have sales in Europe, obviously in the US as well. Top line growth 31%, bottom line growth 33%. So it's growing really, really big. It's profitable. That's something you rarely see with some of these smaller Chinese companies. but it is already profitable, which I love to see that. I take a look at some of the estimates here going forward. It trades at a forward P ratio of 22.6. That's not bad. Forward price of sales ratio 2.1, PEG ratio 1.3. Again, it's a profitable company, man. I like it down here, so I think it looks good. It's been falling with a lot of other Chinese companies, but I think it looks pretty damn good down here. Somebody asked about right above that Airbnb. I just this is one where I'm biased. It had a big rally. What was it, 2 days ago? Tuesday. It broke out to a multi-month high. It's down 5% today, so it's pulling back on after that breakout. I just think Airbnb is just garbage. I just think the few times I've used it, I've just never had a good experience. So I don't like it. So I can't give you an honest opinion because I'm jaded. I'll be honest with you. I can't give you an opinion because I'm probably going to tell you it sucks and it might not suck. So I'm gonna stay away from that one. But as far as a J curve, yeah, I mean technically, if it holds above 150 from a pure technical basis, it does look good. I will give you that. All right, let's see who else here. I had a couple of questions. Somebody asked about Nintendo, NTDOY. This stock's gotten crushed in the last couple of months, and gaming's still big, but Activision's got calmed down from 100 down to 80. Take-Two Entertainment's come down from 187 to 160. So you've seen a lot of them pull back. Electronic Arts, EA, that's held up much better. It's only down from 150 to 141. But I still, I still like Nintendo long term. We're coming into the holiday season, so I think after this pullback, if you have it, hold on. If not, I think it's pretty good back here. So I think it looks decent right here. What else do we got? I've talked about Beachbody a few times. Beachbody, it's just falling apart. I don't like the action, so I'd stay away from Beachbody right here. And a lot of people coming back to the gyms too. So even though you have to wear masks, a lot of people coming back into the gyms. Pinterest, PINS is a symbol on that. Fell big on earnings about a month ago. It hasn't really rebounded much. Again, this was a big run up during the pandemic. Yeah, I think there's too much competition out there for them right now, so I'd stay away from that. Somebody's asked about MUDS, MUDS. I love this one because it was merging with Tops. That merger's fallen through, so now it's just a SPAC. So no, I'd sell it and get out of it. Affirm, AFRM. Firm Holdings, I love. This is a buy now, pay later play. Yesterday broke out to a multi-month high above 70-ish. It's at 69.82 right now. If you can hold that 68.70 level, I think we are starting a new uptrend right here. So that looks pretty good right here. NVTA, Invitae, this is genetic testing. All these stocks have gotten hit. I love them all long term. So I like the Invitae long term. I'd hold on to that. Laser, people ask about all the time. Luminar, just not acting well. The LiDAR stocks are not acting well. It doesn't mean LiDAR is not going to be huge in the future, but it could continue to drift lower in the near term. I still like all the LiDAR stocks long term, but in the short term, it's just tough. Christine's asking, when you estimate future growth, where do you usually get the estimates from? I get them. It's a cumulative of the analyst. I use YChart and Simply Wall Street are two of them that I put together. Also Bloomberg too, but those are the two that I usually go to. I'd say bang for your buck, Simply Wall Street and simplywall.st is the URL. So simplywall.st stands for Simply Wall Street. Great. It's for what you pay. It's less than 150 bucks, I think, for the year. It's great information. I mean, I think for the price, again, bang for your buck, best out there for the average investor who wants to get quick stuff. Places like Yahoo Finance used to be great, but they're garbage now. It's tough to get it past what's real and what's not. They run articles that are paid for, so there's ulterior motives of people that they say. So you must be very careful when it comes to that. All right, folks, I'm running up on too long already, almost 40 minutes. So I'm going to cut it off here. Thank you so much for watching. I just talk too much and it goes so fast. I could talk forever, but the markets are down again. S&P closed an all-time high yesterday. The Nasdaq's up 5 straight days above 15,000 for the first time. We can pull back. It's all right. Bitcoin's pulling back 8-9% from the recent high. That's okay as well. We can't go straight up. Pullbacks are meant to be bought, not panic sell, but bought. If you believe in that company, that asset class, that crypto, whatever the hell it might be, buy weakness. You're going to buy the burger when it's on sale, right? I use my coupons for my Whoppers, dollar Whoppers, again, dollar for dollar, best burger you'll ever get. All right, thank you so much, everybody, for joining me. I'll be back next week with something. And again, the moment I can tell you about what's next, I will. I promise I will do that. But thank you again for continuing support. Thank you so much for tuning in. And we will see you again next week. Have a great weekend. Look for me on Sunday. I will be at the PGA BMW Championship for the final round here outside Baltimore. So if anybody's there, look for me. If not, look for me on TV. I might be the guy in the corner waving and screaming. So have a great weekend. Be safe. Be happy. Go tell somebody you love them. Spread the love, folks. Spread the love. Thank you so much. I'm Matt McCall.